Hey guys, welcome back to a brand new video. I'm RexFinance, and today we have something quite disturbing to talk about in regards to CleanSpark, ticker symbol CLSK. And this thing has the potential to make or break it for shareholders, and it's really not discussed all that much. Now, if by chance you're new here or you're unsure of what CleanSpark is, basically it's an energy company at its roots that decided to get into Bitcoin mining. So the thought process by an investor like me is that maybe someday CleanSpark can become the world's most efficient, most profitable, and cleanest Bitcoin miner thanks to that energy background, because no other publicly traded mining company has a background like CleanSpark has. The expertise they have in energy development and microgrids and renewable energy. Also, if you're new here, I would greatly appreciate you hitting that subscribe button, and I want to hear from everybody what your personal price target is for CleanSpark if you own it. And without further ado, let's go ahead and get into this. Today we're going to look at a spreadsheet that I built that tracks the 4 most notable ETFs that hold Bitcoin-related stocks and equities. In particular, these 4 ETFs are RIGS, Block, DAP, and also BKCH, the blockchain ETF. This spreadsheet is available 24/7 to all of my members, so if you're interested in joining the membership, hit the join button down below located right next to the subscribe button, and if you don't see the join button, just go ahead and click the Patreon link in the pinned comment. But with that out of the way, let's go ahead and dig into what is so disturbing and what could be make or break for us shareholders. And if you look at this, we can see that these 4 ETFs hold a combined almost $21 million in CleanSpark stock. That seems like a lot. I mean, I wish I had $21 million. I think almost all of you would wish you had $21 million. That's a lot of money. But it's not so much when you look at how much money these 4 ETFs have in other mining companies. For example, Riot Blockchain, they have $78 million in it. Bitfarms, they have $80 million. Marathon, they have $67 million. In Hut 8, they have almost $90 million in. And just for CleanSpark to catch up and be more in line with the low end of these holdings in the ETF, these funds would have to purchase an additional 2.5 million shares of CleanSpark stock just to get us up to the $70 million invested level, which would still be on that low end. That's a lot of money that isn't invested in CleanSpark, but definitely could be and probably should be. So what's missing here? Why is this a big deal? Well, it's a big deal because those 2.5 million shares that these 4 ETFs would have to buy equals 7.14% of CleanSpark's outstanding share count. That's a lot of shares that would have to be bought up to get us in line with the low end here of money invested into each of these individual stocks. That would probably represent at least a 2x in the current share price. I would say put us close to $40 per share, depending on how long it took them to buy those additional 2.5 million shares. Now, what's the difference here between CleanSpark and Marathon and Riot, Bitfarms, and Hut 8? What is keeping these ETFs from investing more heavily into CleanSpark? Well, it could be a variety of things. For one, CleanSpark is the newest name to this space. Number 2, CleanSpark is projected to be the smallest miner out of all of these names when it's all said and done, and all the companies have all of their miners deployed. And that's a big deal for ETFs that want to be blockchain related or Bitcoin related. You probably want to be more heavily invested into the companies that are going to be the most exposed to Bitcoin and crypto going into the future. And that's just quite simply the companies that are going to be mining the most Bitcoin in the future. So that's probably the biggest deal here, why these funds aren't as invested into CleanSpark as they are all these other names. But when you look at it on paper, it still doesn't make sense. Our valuation compared to what our hash rate is going to be makes little to no sense compared to these other miners. For example, right now, Marathon is valued 9 times higher than us. But when it's all said and done, CleanSpark's hash rate, so how fast they're mining Bitcoin, is only going to be about 4 times slower than that of Marathon's. So you can see there, Marathon is valued 9 times higher than CleanSpark, yet the amount of Bitcoin they're going to be mining is only 4 times as much as CleanSpark when it's all said and done. So to me, this doesn't make sense. I think these ETFs are making a mistake by just going full blown into the biggest miners and the biggest names in the space, because there's still value here. And let me tell you, anytime there's separation like we're seeing right now between CleanSpark and these other miners, valuations catch up. Either CleanSpark's valuation is going to go way higher to catch up to the others, or those other companies, their valuations are going to come down while CleanSpark stays stagnant or even maybe goes up a little bit. The other option is CleanSpark's valuation goes up while the other miners come down. Now, in any case, that's probably a good thing for CleanSpark. But the reason this is so disturbing and could be make or break for CleanSpark shareholders is because there's no telling, there's no knowing that these ETFs will ever double down on their investment in CleanSpark. In fact, if we look deeper into this spreadsheet, we can see that DAPP has sold some shares in CleanSpark. Now, not very many, but they've still sold. BKCH has sold shares in CleanSpark. Yet, when we look at the other names, sure, DAP sold some shares in Riot, but you'll see that on the same day, they sold shares in all of these companies. Now, what is interesting, what we're seeing, is that money's actually maybe starting to come out of Marathon, where the total dollar value invested into Marathon between these four ETFs has actually decreased from almost $70 million to about $67 million. But on the other hand, you have Block Holdings, probably the biggest Bitcoin-related ETF, buying up Marathon like crazy. I mean, sure, DAPP and BKCH have sold a significant amount of their shares in Marathon, but you have Block buying them right up, and you also have Riggs that bought a fair jag on Marathon's dip. And you'll see that this is the case for a lot of these other miners. Money keeps coming into these other miners, yet CleanSpark is staying pretty stagnant in the amount of money total that's being invested into the company. So whether or not these ETFs end up deciding, oh, hey, maybe CleanSpark is a little bit undervalued compared to these other miners, let's go ahead and put more money into CleanSpark because their valuation is going to catch up. We don't know if that's going to happen. We simply don't know if that's going to happen. And if it doesn't happen, then there's going to be other forces that are going to have to drive up CleanSpark's share price. Now, if it does happen and these funds buy the additional 2.5 million shares in CleanSpark to catch us back up, well, obviously the share price is going to move very hard and fast. And, we'll just have to see what happens, but that's a bit concerning to me. Just to review, we use the example of Marathon. They're valued 9 times higher than we are currently, yet when it's all said and done, the amount of Bitcoin CleanSpark is going to be mining is only 4 times less than that of Marathon's. That doesn't make sense. It's almost an arbitrage opportunity if you've ever heard of that word in investing. And if you haven't, I highly recommend you look it up. Another example we can use is Riot Blockchain, perhaps the second most well-known miner. Riot Blockchain, when it's all said and done, is projected to have a hash rate of 7.7 exahash, while CleanSpark is around 3.8 exahash when it's all said and done. So our exahash is a little more than 2 times less than what Riot's is projected to be. Yet our share price, our market cap in relation to Riot Blockchain's market cap, is about 5 times smaller. It's pretty apparent right now CleanSpark is undervalued, and I'm a firm believer that the big money institutions, eventually they see this because money always finds the best opportunity and the highest upside. And in relation to the other miners, there's no doubt that CleanSpark has the highest upside. It's just a matter of when they decide that it's the time to plow more money into CleanSpark. Again, let me know down in the comment section below what your personal price target is for CleanSpark, because it could go a long, long ways up from here, or it could come crashing back down. And I think it's important we're ready for either scenario because we're so closely tied to such a volatile asset right now. Anyways, with that, I'm going to end this video here. I hope you enjoyed it. If you did, feel free to hit that like button down below. It helps me out tremendously. And with that, I hope you have a great rest of your day. I'll be back with a brand new video later this week. Peace out.